Okay, how are we going there, guys? I hope we're all good. I'm just getting myself organised, just slowly, just going to see. Well, I've got my backup plan behind me. I've got my laptop hooked in, everything hooked up and ready and running. So I'll just see how this goes. If we all go well, I mean, last time we tried on Thursday, it was a bit of a shambles at the start, and it picked up it was actually just the internet connection. It's slower than normal. So we should be ready and raring anytime soon. I just want to make sure. How are we going? So just let me know if you're, everyone's all good. You can hear me loud and clear. I hope you can hear me, guys. I'll I'll just get started. I'm assuming everyone's seeing it a bit quicker than I am. I've got it through my phone as well, just to make sure that I can see all the questions, everything going. All right. We're all slowly hooking in. All right, let's just get going, guys. If you are, as we go, if we are having a few issues, just let me know, because I'll probably be the last one to see it, to be honest. There we go, just going to mute that. So just make sure, yeah, just let me know how we're going, and we'll get up and running. I'll just change over the computers. It won't take me a minute today. Got everything ready to go. So, all right, welcome to TradeSetup. Hope we all had a great weekend. Pretty quiet one for me, just a bit of work around the house, so still getting a bit organised, still settling into the new place. So just put that in there. Yep, still settling in, so been working a bit, trying to do some gardening. Got you on mobile, great, Greg, that's good to hear. Nice, mate, thanks for that. Yeah, so just a bit of gardening there, so a bit tired today, not too bad. But looking, it's been not a bad day today, so the market actually opened down, which I didn't really expect it to open down this week, and then it's popped back up. So I think somewhere around break even at the moment. US on Friday night, I guess most of you already know if you've read about it on the weekend, they were down quite a bit. We had gold, which is quite a surprise. I've been looking for gold. I know a lot of people were looking for a bit of a higher low a while ago. I actually looked for that secondary leg lower, and it may or may not just be playing out now. We've had a good bounce on Friday, so that's interesting. Today I want to have a bit of a chat about bonds. Now, I'm not new to bonds. I've traded the futures. I traded them for a few years a while ago, so I know maybe the mechanics, the basic mechanics. So if anyone out there knows a bit more than me, feel free to put your 2 bobs worth into the chat. But I think it's just an interesting point. We've spoken about, especially in the US, not so much we're looking at the Australian bonds, but the US. It's the yield curve. If anyone knows about the yield curve, we'll have a bit of a look at that later on. I just want to chat about it. I find it interesting. I thought it might be worthwhile talking about. We've got a trade of ours that we closed out a while ago, and we'll talk about that NCZ. Just as an example why it's, why it actually is important. It's not, mate. It's not. It is bloody open, so I won't lie. That's. You can see the chat just popping up there on Optus. hopeless. I figured out more on the weekend about Optus. It isn't just me. It's pretty much this area. Apparently down the road they've got NBN. Up the road they've got NBN. There's this pocket where we are at the moment that don't have NBN, and that's coming hopefully soon. But you never know. It could be a long way away. But apparently it's in Maine, and someone said they're doing a bit of work around here. So maybe we get through Christmas. They do their job, and we got a lot bit of internet connection. Otherwise, I'm just going to have to lash out and just go through the phone, which seems to be does the job. Go through the 4G network, which is pretty good around here. So I'm just going to talk about a few different things today. So anyone that's new, I know I say this every time for the oldies, but anyone that's new with TradeSetup, you'll see us top left-hand corner on Twitter. Join us on Twitter. You can just follow us on Twitter. I do tend to like a few things every now and then, which I think are very interesting, and especially about current markets and what's happening. There is a lot of rubbish on there, but hopefully we don't put up rubbish, and we put up stuff that we kind of like and we think's interesting to trading. Join us on Facebook if you like to. It's the top right corner, but probably the most important, just link into us on YouTube. Down the bottom right, you'll see us in there. Subscribe to us there, and then what we'll do, you'll get an alert every time we go live, whether it just be the normal streams, Monday and Thursdays, or whether we do some meetup groups. We do a couple of groups. We might just do a special live stream, and that's generally when me and Dav we'll jump on, talk about a few things we find interesting, and just talk about the mechanics of trading, the way we look at it. We've got a few that are in the data bank on YouTube, so feel free if you're new just to look through some of the stuff we've done in the past. Let's get into it now. Enough of my ramblings. I've just got to change over something before I normally forget. That's okay. All right, so this is what you're looking at now is the ASX. I think we'll look at the charts now. Look, it's not looking too bad. You've had a decent this move here, which is the length of time we sort of spent consolidating through there, and we're actually starting to build some. At that stage when we're looking at it, I actually thought there was potential for it to roll over. Now, it didn't really break through that base. It was just putting pressure. With lower highs, you've got that original push down, bounce back up. I thought here we would consolidate without lower highs. I thought we were more range trade through here. Way back, that was back in June when we were talking about it there. Instead, you can see the pressure with some lower highs here, then a lower high through that 58, even a washout here. And then we got that push down, but it kept holding up around that 56.50 zone. And even right up until the end, we got some lower highs. So it was looking like it was ready to break down and just have that secondary move down. But, we are linked to the US, and the US just continue to put pressure on the upside. So that's what's led to that nice strong move higher, is the fact that I don't need to be on that thick one. The fact that we've spent so much time consolidating between that range, 56.50 and say 58, chopping around through there, and you would have got, with these lower highs that we mentioned just then, a lot of sellers that are preempting the break. Now, it's easy to say in hindsight what happened, but you can see there you really don't go short, on the overall market. I don't think you load up the boat on the short side until it sort of starts breaking down, and then you get that shoulder trade. So it's a slightly different type of setup, what you'd be looking for. So really, that's what's happened there. You can turn around, the market's just squeezed everyone back out again as we got all these shorts built up. It's turned around, retraced on them, breaking some of those lower highs. You can see it just took off and really just pumped up through those highs at, was it around 59.50. And we've had that extension through 6,000, which we identified as a fairly significant level. Well, it was a significant level. It still is pretty significant level. So we just have to see whether this market can, because it's pumped through, I actually don't mind it at all. You can see on the daily we've had this little correction after pushing through 6,000. A couple of days on the downside, and we're just starting to get a few wicks. Anyone that looks more in depth at the candle, wicks is a sign of rejection. We'll probably go back to that thicker chart. You can see a couple of solid down days. You can see they were opening on their highs, pushing down all day, open down on its finishing on its close. This day here's a bit, it tried to go on with it and got rejected, and then it actually finished up as an up day. And the next day, a bit wicky on the upside, and then you've got probably the action today. We actually opened down, I think we're down 30 or 40 points at one stage. And what we're doing now is just, it looks like we could be rejecting around that 59.25. Nothing to say that we can't just roll over from here and have a deeper correction. but you can see the amount of energy or strength or selling pressure that it took to push it down here is being soaked up. So if that can hold, we may see this start to consolidate around here, maybe build that higher low we like to see, and start to really push up through 60, 50 and start attacking some highs. We've spoken about it. I think I sent out a chart a while ago. I'll just go back to the weekly. It might show it a bit better. So I just got to change over from thick to thin. There we go. So if we take it from this right back on the left-hand side of the chart, that's our leg up, say from 4,000 up to 6,000. That's a 2,000 point leg up. If we take it from around 48, like we mentioned, 2,000 points roughly is taken to 68, which is the all-time highs. So it sort of all adds up to being a nice little healthy leg up over the longer term. So in saying all that, there could be, I mean, we don't know what's going to happen just yet, but there could be quite a bit. This could be just the start of a nice healthy leg up to, even to break those all-time highs or test those all-time highs. Not saying it's going to happen again, obviously, but just for all those bears out there, just be careful. That's what I guess I'm suggesting. If you see a quality setup on the long side, with the market looking like it is on the ASX, it's worth having a bit of a crack at. And I guess on the downside too, it just means that you wouldn't heavily be weighted on the downside if you're a bear, because there's no real signs that, even in the US, you can look at the Dow. Look at the Dow. I mean, there's nothing there at all saying that we're rolling over. A couple of down days, everyone's looking for that correction. We got and don't forget too, I think this week is a shortened week in the US. I think it's a holiday on Thursday night, which means you probably find that the US is going to be closed on Thursday night, but Friday will probably be a quiet week because they've got the Thanksgiving, I think, if I'm right. Correct me if I am wrong, but Thanksgiving it's suggesting to be fairly quiet. I think historically a fairly quiet week this week, so don't expect too much action this week, and it's the end of earnings too in the US, so we'll just have to see how it goes. I think we could start seeing some buyers start to jump in. But we'll just see. I mean, everything else. We've got the FTSE was another one. I'm quite interested in that one. Interested to see how it goes. You can see here that price action. We get the leg up, correction. Tried to go through the highs, had to correct all the way back down to retest the lows. Then we had a leg up, contraction lower. So maybe we're going to head down to test 72, or we build a higher low. But either way, that's longer term. That's fairly positive here. Looks like it's getting a bit heavy now, but there's nothing to say we just don't build higher low in here. 74, bang, through the new highs. The DAX, like to look at the DAX, something along the same lines, a couple of down weeks, nothing to say, can just hold up here. That's where it broke out, 13,000, start building and go into new highs again. Still the trend is up. So pretty much most markets, even the Nikkei, what's that doing? There we go, you can see the data issue there. It's a bit slow to load. I haven't loaded that for a while. Thanksgiving Frankston style. Is that you, Attila, or is that Davin? Getting cheeky, that's it. I said to Dav before I was going to give him a bit of stick. I think he's got the upper hand already. Shall I say it, Dav? You had a long weekend, mate? Davin, at his age, he's got a 3-day hangover, not just the traditional one when you're younger. Anyway, that's why he's ripping into me first before I can get him. All right, what do we got here? I've already lost my... So this is the Nikkei. That's heading high. It's had a healthy leg up, and you can imagine when it gets through 3,000 on the daily, a bit of rejection there. It's probably coincides that little sell-off in the US and everything. What else we got? Hang Seng, there we go. That's what I want to look at. It's probably, again, looking positive. So all the markets across the board pretty much heading their way higher. Everyone's expecting a bit of a correction, but until we see it, don't believe it. Just keep plodding away. If you see a healthy setup, nice little setup, go long, basically, because the markets are heading higher. You don't want to get caught just sitting around waiting for the market to roll over and you miss out on a 1,000-point rally on the ASX anyway. And now this probably could lead me into potential catalysts. We spoke about this before. Bonds, like I said, just correct me if I'm wrong on my bonds. I mentioned it to Dave. We're not bond traded as such. I'm a futures trader in the past, and that's what I've done my intraday trading on. I did a lot on the bonds in the ASX. It's the 10-year bonds and the 3-year bonds in the ASX, on the SFE, sorry. Well, one and the same. So they're not, I don't like to say I know a lot about bonds and the mechanics behind them, but what they talk about a lot in the US or in bonds in general is the yield curve. Now the yield curve's the difference between the shorter dated interest rates and longer dated. So what's happening in what they're talking about a lot in the US at the moment is the flattening out of the yield curve, and that's jet lag. The problem is, Nando, he hasn't gone anywhere. It's called car lag. Anyway, yeah. So when we talk about the flattening in the yield curve, what we're saying is, or what they're saying really, is that the shorter dated interest rate outlook is different to the longer dated, and meaning that when you get the steepening of the yield curve, it means that in the future we're expecting some really some solid growth numbers coming out in the US, or anywhere really, even in Australia. If you look at the difference between what we've got, the bank bills, which are really 30, 90, what was it, 30, 60, 90 day bank bills, and then you've got the 3-year bonds and the 10-year bonds. So when you look at the shorter dated stuff compared to the longer dated stuff, if you're looking the longer dated stuff, the yields, which is the interest rate, if the yields start going up, meaning we're anticipating the yields, the interest rates are going up. If it's longer term, you'll find that the 10 years are going up. And in the US, it's more of the 10-year notes and the 30-year notes are starting to head higher on the yields. That means you get a steepening of the curve, which means that the outlook is the economy's growing, it's getting stronger. And that's basically how you associate the bonds or the yield curve, the steepening of the yield curve, to the overall market. Strengthen the economy when it's steepening. Now, in the reverse, when you're getting a flattening out of the yield curve, that's either meaning that the longer dated are coming down, but if they're not moving, it means that the shorter dated are going up. Does that make sense? So you might have a yield of I think in the US, shorter dated are 1.7% on the yield, and or 1.3, and the longer dated are 1.7. So when you get the shorter dated going up, that's a flattening out of the yield curve, meaning the longer dated perspective is not moving. Okay, their outlook for inflation, their outlook for the economy is not really changed, but it's just the shorter dated. And we all know that and I actually thought that you're going to get a steepening of the yield curve. The longer term outlook is going to be good for the US. They're going to raise rates. They're going to continue to go into that rate raising cycle after many, many years of doing absolutely nothing. Now they have raised rates a couple of times. They're looking at raising rates in December. That's pretty much locked in at the moment. And that's why you're getting the shorter dated bonds heading higher. But the longer dated, it's interesting to note that they're really not moving, meaning maybe they've overcooked on the interest rate rises, or maybe the economy's not quite as strong as what you think. And that's probably why, maybe that's why I think the gold's starting to kick up, has got a bit of a run on Friday night. So it's not really, for me, I'm looking at it as not too positive an outlook in the US. But look, again, that's just me trying to read into different things. What are the signs? What's going to come up? And there was always talk of the bonds, leading the equity markets. Obviously, if you've got interest rates going up, it's going to put pressure on the borrowing costs in the US. We're just all talking about the US because that's what everyone's looking for, the market rolling over in the US. We'll probably roll over ourselves, but that's a different story altogether. But in the US, you get interest rates going up, lending's a bit tougher, and when you got valuations where they are, and generally equity markets or traders in general, they look ahead. They don't look at what's happening right now. They've already factored that in. They look at what's happening in the future, and they've factored that in too. Now, if we are factored in at the moment, and we are quite high, or in the US they're quite high, high interest rates are going to crimp it, and we'll start looking to factor that in. But then again, I think it just they may be looking past the shorter term interest rate rises to the longer term, and at the moment the longer term is not really moving. So look, it's a tough one, but I think it's worth noting, if you can do a bit of reading up on that, how bonds are working and what it means to the equity market. It's worth doing, because the bonds, they do. In the GFC, you saw the action in the bond market before we saw it in the equities. And it is a lot more professional market. So they tend to react quicker, and they start to read in a bit more. So if you see bonds moving, you saw it, and the bonds are moving quite a bit yeah, through the GFC, yet the equities just sitting around trying to figure out what's going on, and then boom, we had the GFC. So it was a bit of a heads up in the bonds market. So it's worth just looking at and you know, reading about, educating yourself about, just to see if that's going to be a bit of a heads up again, if we are going to see a major correction. But again, we seem to be talking about the same thing over and over again with regards to valuations in the US. You know, they were overcooked last time. Nothing happened. We've just gone up since they were overcooked this time. You know, we've had some good reporting, better than expected. In all honesty, the returns previously were better than what they are now. So if you can see that they're slowly not getting the same sort of returns in earnings over time. So maybe sooner or later you might find that yeah, the market rolls over. But again, it's a wait and see type of action, isn't it? I hope that made sense. Anyone have any other comments maybe that they want to add on bonds while we're at it? Or do you believe me? Did I sound convincing? Or did I just sound like I was making a lot of rubbish up? Anyway, I know it's probably going to be a bit delayed on what I'm seeing, so I just want to click over to where we are at the moment. We're only down 8 points at the moment, so just want to see how long it takes to click over on my phone, so know how much of a sort of a lag we've got. Alright, there's still a bit of a lag anyway. So sorry there is a lag there, guys, but we'll plow ahead. So again, just get ready to put in anything that you want to have a bit of a talk about. Whack it in now, and I'll just go through some of the stocks we've got and what's happening. Like I said at the start, I wanted to talk about NCZ as a bit of a, you know, it's a really good example of why you don't hang around in a stock. We've got that on the screen right now, so it's probably good. We'll kick off on that. Stream health, okay, everything's looking good. It is just very, very slow. All right. So what we have with NCZ, I'll get that up on a bigger chart. Actually, let's go through just what we've got at the moment. All right, so we've got TAW now. That just kicked off. TOR, it's at 43 at the moment. That just kicked off through those highs. Anyone that's actually got that and is following our alerts, probably going to be sending out an alert. So a bit of a heads up. I might send out an alert in a minute just to raise the exit on that, somewhere around 35 from 32.5, just below this high low. I'm just going to happy to tighten it up there. We're sitting around at 43. I think we're up 73%, 72%, 72.5. 72% on that, so you know, look, sooner or later it's probably going to have a deeper correction, and I don't want to close it out on the second half just in case it keeps going, but we'll see. There's some really nice returns on that one, really handy. It is getting a bit extended on the weekly. It's just had a bit of a pullback on the daily, and it held the high low, so it's all good signs. It still could keep going. Like I said, we could be looking up towards 47 to 50 even if we want to break that. Actually, let's forget about that. But I'm happy just to raise that exit somewhere around 34.5. But it's a bit of a heads up because that is a nice high low. So if that does break down there, I think we're going to have a deeper correction. We might see more of what we call that macro correction, lower highs, lower lows, until we start holding a deeper, on the weekly basis even, correct this little leg up here, hold a major high low, something like this, and then start a new leg up. But and that way, if we get out now, we can actually look at it, watch it, keep an eye on it, and then get back in for a jump back into the start of a new leg up. All right. That's TOR, MGE, you know, that's that 3 mark. We've taken a partial. So on both of those, we've taken a partial exit on TAW, and we have on MGE at 294. We're locked in at 295, I think. I'll just have to check that. MG is locked in at 295. So we're actually got a lock in on the second half, just a touch higher than where we got out on the partial. So that's good. If that can keep on extending up, That would be nice, but again, that weekly is looking a little bit extended there. I'm happy to tighten that up when we see, because you've got to ask yourself how much more move higher is left in it. How many more buyers are on the sidelines to keep buying it up at these higher levels when it is looking a bit stretched? So yeah, happy to keep it at 295. We can get a bit of a pullback, build a higher low, and go into a new high. Look, I'll just tighten it up again, but at the moment we're sitting pretty on that one. RMD, we've taken a partial 11.15. That had a bit of a pullback after we took that partial. Got 1 cent higher, so that was great. 2 cents, 11.15, so got 2.5 cents higher. I think on the day we did it was, on this day here, it was, oh, we missed out, so it was on this little pop-up, 11.16, yeah. So on this green candle, we took it 1 cent below. I had a bit of, the next day it opened up, triggered it again, and then backed off, but we built that high low. So we've got our stop at, again, just have to check that. RMD's at, I think, 10.55. So we're giving it a bit of room. So we're just below this high low, basically, and see if they can kick on with it. All right, so I've just got a note that I've gone off. Here we go. It's struggling, guys, but we're there. We're still going. How's it all coming through? Looking good? Sorry, Nando, it's probably, you're going to see this a bit late, but... All right, sorry there, guys. Nando, it's going to be a bit late, but we normally look at around 50%. With your partials, you can do whatever you want, really. I mean, you can take it in thirds. I like to lock in more of when you get a good little move up, because I'm trying to, with my trading, and Davin, I won't speak for Davin, but he's pretty much similar. We're trying to take the most out of a good little leg up. Sometimes it's a weekly leg up, and you might let that partial go a bit more. Sometimes it's just a daily. Sometimes there's, you're coming into a significant resistance zone. But generally, we're looking to book 50% on most of it. So there's reasons, obviously, different reasons for where we take that partial. But generally, I am happy to take 50% off on the first partial, and then you can actually, we just run a second one anyway, and just try to let the second one move as far as possible. But you can actually split, you can do 50, 25, 25, you can do whatever you want really. But I like to lock in a good chunk at the start. So you'll probably see this a bit in a minute. So that's RMD. CKF is, we got in at 94 on that one, and we got up on the first little push up, and the last few days you can see the good thing is on CKF we're starting to get these wicks on the daily as well. We're starting to get, it's getting held up, and I think the longer term structure is what I like. And again, like I said, we've got a little challenge between Davin and I like this sort of move up, and we've seen these, this is what I liked it for. We get 1, 2 moves down, we started to build again. And then we get 1, 2 moves down. Then we started holding that major high low at $5, pushing up. And this is, for me, we got that. So I think we're on a higher low. We're on that phase of building a higher low on the weekly. And I liked it off the daily is because we've really, this corrective action, one leg down, we had a lower high here on the daily and another corrective leg down. So they got that secondary move down, and I'm expecting this to be that little move up. So what I'm trying to do is really get in a bit early, front running a break of, I think it's this high at around 630. Because I think if we can at least push up there, we're going to be up on the trade. And then we could potentially just lock in at least a break even. But if I'm wrong, we're not risking much anyway. We're going to risk at 560 on that. So really, I do like this little wicks. That's, rejection, that was on Friday. Looks like we're going to get rejection today if we can finish around this zone, or even kick up and have a little green candle. And you can see this rejection has played out previously. So it is kind of good. I did like that green candle too when I was looking at it. A good solid move down, and a couple of red candles. You got that secondary move down, and that was rejected quite strong compared to what we saw in the buying, the green candles or the buying in that first move up. So for me, that's some good signs. It's not my typical setup, but I think there's some merit in it, and only time will tell. We'll see how we go. And the other one that went off today was Saracen. That's really just trying to nab some gold, something. And then, I think we went over gold the other day. It might have been on Thursday or Monday. We're talking about gold. Looks good. And these are ones, and there's another one, GOR, I like. Look at that one. It's a bit different because you are starting to get a punch out through the highs, so you're holding, and on the daily we are a bit extended up here towards those highs, so it's slightly a different price action, but the weekly still looks good. I mean, the weekly could easily just blast through those highs at say 75, 76, mainly these highs at 75, and then on we go, we extend, and we probably have to have a little bit of corrective action, bit of a pullback as the market looks a bit extended, and then get a high low, and then off we go as buyers just step in. You can see they're stepping in high lows, high low, even before it takes out the highs. You're getting this high low, so you're getting the pressure on the upside. More of a macro correction through here, and when you can get the lower lows and then the lower highs, sorry, putting pressure on the market. But in context of what's happened, that's just reversion to the mean, and then we start picking up again. So this has easily got the potential to punch up through 75. That's GOR, Gold Road. I like that one. DCM, we've had a nibble at that before. Didn't play out too well, but it's actually looking pretty good. And the reason why this is looking good, it's had such a good strong leg up, and this has washed out a lot of buyers with the move down to say 140 on this low. And then we're starting to lift. We get this little higher low in here around 2, and we're starting to lift back up again. And it's just looking, you know, once we get through this high, I'd be looking for a bit of a higher low as we get a bit of heat coming out. It's getting extended on the daily here, but on the weekly, it's still it could easily just power on up, even to 3, just where it broke down through here previously. So yeah, gold's starting to look good, and that was Saracen that we entered today. The weeklies are looking good. It's looking like it's just going to grind higher, high lows, high highs, and away we go. No worries, Greg. High highs, high lows, like I said, and we see if we can work our way up to 190. It's all really just see how we go. But that's at 150 entry, just through here. Looking like we're attacking those highs now at 153. What's that high? 153 and a half. See if we can finish on a positive note. It's up 1.6%. It's always good to get in, you know, to enter when a rising market, because you always feel good about yourself. It's a nice entry. That same day you end up, you know, 1% or so. That's always nice. So we'll see if we can lock in some gains on that by the end of the day, and just see, you know, the next few days continues on. It's got some high lows, doing the right things, heading in the right direction. So that's it. So NCZ was the one I think we were going to talk about, weren't we? So before I get too sidetracked, we'll quickly click over to NCZ. Now, this, I think anyone that's been following us for a while knows our sort of style and why, you know, I really do think it's important to know exactly where your risk is if you're wrong, because don't forget, you can always, you never get concerned about getting out and try to minimize your risk. I think that's the name of the game. Minimize your risk while you're trying to open up the trade. And generally, if you get it in the right zone, you can have a tight risk because you're in the right zone. You're buying into a rising market. You're not going to come under much pressure from the start, and you can just keep on going. But if you think you're in the right direction and it rolls back on you, then obviously you're not. So you want to make sure you're out. Doesn't mean it's the end of the trade. It just means that you're out back on the sidelines watching for a better entry setup. Okay, and you're not risking too much. So you're not risking that you're completely wrong. You're still in the trade, you haven't exited, and you're completely wrong, and it goes against you, and you got that one that you have to put back in the, you know, put in the back pocket and just hold it for the next 5 years. Does that make sense? So it's always good to know exactly where you're entering and why where you're entering, why you're entering, and where you're going to exit if you're wrong. You have to always know when you enter a trade where you're going to exit. If you don't, you know, it's really, you haven't got the full plan. You're not really, you know, what do you call it? My idea is that you know, you're not doing the right thing when you get in, I guess. Not having a crack at anyone, but just that's what I mean by this one. So we got in here, you know, there's a particular reason why we got in here. Actually, I'll draw it up. I won't muck around. I'll get my little chart. So I thought it'd be interesting just talking about this. If you any questions, just shoot a question up on this as you go. So this one here, you can see at that time, you know, we've got a good little rise in here. You got higher lows, higher highs. Everything's looking great. So in here, we looked at it, you know, we knew when we could box it up, we knew exactly where our risk was. We got this little, this move down, good washout. You can see it rejected there. We've got a green candle, another go on the downside, another red candle, meaning that sellers are coming back in, but buyers are happy to start stepping in here. So we assessed all that. It's in a great continuation, sort of an area for a continuation trade, meaning that it's another high low. We expect it to go through this highs at 165 and just continue its way up. Now we entered there, we got up on the trade, then it started getting rejected up towards those highs. So the reason for getting in, we knew that there was a couple of broker upgrades on that as well. I think somewhere above the $2 mark. This is another thing, never listen to broker upgrades. They're not the be all and end all of a trade. You always just go on what you see. Obviously, there's a good reason to get in. It's a good story. But when it comes down to it, people will trade the stock no matter what the fundamentals are. They will still trade it. You've still got emotions coming in. If you bought it down here, when you start seeing this couple of red candles, you're going to get a bit nervous. And then you start seeing this, you're going to get a bit nervous also, no matter what the fundamentals are. And no matter what the brokers are saying, whether it should be $2, fair value is $2.20. Okay. I'm not bagging them, but I'm just saying that you've got to really have your own plan of attack and know exactly what you want to do. So at that stage, we had a couple of broker upgrades. They lifted it, I think, somewhere the high dollar mark to over $2. So all positive. Problem is the market didn't go on with it, and we saw some selling. And once you start breaking this uptrend, to me, that's a good sign that we're going to go into a complex correction where you've pushed up here. We start getting that lower high, and then we start correcting lower and really start washing out a few of those late traders. And then we have to look for that higher low to build again. Does that make sense? When I mean higher low, I mean something like this. Bit of contraction, showing the strength of buying again, and then you start getting that another leg up. But again, like I said, we don't want to be sitting around waiting in a trade, waiting for that play to, because it may not even play out. This thing must go, that could go all the way back down to 50, all the way back down here and do nothing. Change the fundamentals, anything, any reason. So you obviously want to be out, reassess it as you go. And if you start getting this sort of price action again, okay, then you jump in, and this could be the time when it actually really kicks on through $2 and $2.50 and so on. And we really take advantage of that next strong leg up. But at the moment, this leg up hasn't corrected, and we know that we're getting in a bit late. You've got to know where your risk is. And for us, it was through here. So, here, if it was going to go on with it, even though it broke this trend line, this move, if it broke here like it did on those couple of red candles, just in here, the fact that it sort of just started break, it was holding. So that after that green candle, it should have gone on with it. So the idea was that, after that green candle, I'm happy to raise my risk here, knowing that we're starting to show signs of weakness. We rejected up at those 165 zone. We really started selling off, which I think we shouldn't have. So it's always good just to, tighten up your risk. This is what we spoke about a long time ago. Rather than just waiting for it to hit, right down here, below 120 where we originally had our risk, rather than just waiting down there, tightening it up, not just leaving your risk. There's always you're always going to be wary that, okay, if you are going to get hit on your risk and you're getting more confident that you're going to get hit, why not tighten it up, to an area where if you're proven wrong there's a good chance that we're going to get proven wrong down here as well, which I think we just about are on 120 at the moment. So, so that's pretty much the reason. And you can see here, this is where I think we could be going into this sort of phase, lower lows, lower highs. Maybe we start holding 120, we don't know, but I'd rather be out watching it and reassessing it, being on the sidelines and start to get those higher lows holding again. Strength of buying, we're in a good zone too. Strength of buying starting to come back in, prove us right again, and we're happy to re-enter. Took a small loss on this one, nothing significant, nothing to worry about. It's part of trading, but part of trading's been on the sidelines, ready to go back in. Like Davin just put up there, exiting non-performers, and we're always happy to do that because if this thing just turned around and rocket straight back up, we're not on it. So be it. There's always something else. But if it does, we're risk managers. If it does roll over hard, we're not on it, and we've got our money, we've taken a small loss, we've booked that small loss, we're back on the sidelines, ready to go again. I hope that makes sense there, guys. I thought it was a long-winded effort there. If you didn't know, I tend to, once I go on with it, once I start bit of a sermon, I'll happily keep talking. So just ask my wife. Except like you nice people, she will tell me to shut up. That's all good wives do. Alrighty, so let's get into it now. We've got a couple that Greg's put through, MFG and SGQ. Anyone else just before that? Before the bagging of Frankston and the turkeys? No, that's all good. All right, let's get into it now. If there was any questions, I know it's probably going to be a bit of a lag, but put them in and I'll still come back to them. So you just have to realise that we are getting a bit of a lag in this streaming. Because of good old Optus, I love them. All right, so what were you asking there? We'll start off with MFG. Magellan. This one, is this a weekly? I've actually been watching this one. I'll tell you why, Greg, I don't mind this one at all. There's a few factors. It's tough, probably a tougher one to trade because we did have that good push up. This should have been a stronger market if it was super strong, but instead it's come all the way back down and retested these lows, but we're starting to lift again on the daily. Let's just see what the weekly's saying. And look, even on the weekly, it's pretty good. I mean, it actually is looking really good. So let's start off with the weekly charts. Any questions, Greg, just whack them up there. What am I looking for? I'm looking for that. There we go. Here we are. Now on the weekly, you can see that that's holding that trend up. You know, it keeps reversion to the mean here. Bit of a more, not really reversion to the mean here because it was still as a shallow correction. And that was your one corrective action, 2 legs up. We have to wash out a few more traders here. If we pull back, the pullback can just go sideways, don't forget. Corrective here, the market's caught up to it, the MAs are caught up, and then we started lifting again. Now, what I don't mind is that the fact that we've just got that 23 mark, so it's a bit, we've got up through those highs, wasn't that strong, so we probably had to have a deeper correction, so that's why I don't mind this type of deep pullback to 23, and we're starting to lift again now, so really the longer term it's heading higher on the weekly. We're getting to the point now where it's either going to prove us wrong and roll over, have a corrective, you know, more of a longer term correction of this full leg up, this longer term leg up, or we're just going to punch up through those highs at 29, take out 30 and just continue this longer trend higher. So if we go down to the daily, I know that weekly is actually looking quite nice. I do like it. We've got the major high low here, which led to this push up through the highs, just through 29, fell short of 30 a little bit. And then we've corrected down, touched on the swing level, you call it, where buyers were happy to jump in. They're happy to jump in at 23 again. And then we're starting to hold, you know, on the daily, just some high lows as well. So looking at the daily, it probably stands out a bit more there. This is MFG. LVH, yeah, we'll get into that one. Good call, Dev. I like that, Dad. I have a temporary crush on ATC and THC. Yep, I'll look at them. I probably would have too. I've got a feeling one of them's kicked off hard. All right, so what we've got here, that's that little, you know, washout. We went sideways, and then we started lifting here. Would have been a nice entry here, even off this nice little entry. And then you've got this good strong move up, deep correction, which you never want to see if you've just bought it in here, and you've washed out. Excuse me. And we've washed out a few of these late buys in here. So if you bought it around this breakout, or even in here, you're probably holding it still. Okay, that's great. Push up here. I would raise my risk to here to at least break even and lock in a small gain. Instead, that's popped up. We've got that longer term. We've had that deeper push lower. So all that's good if you're a new buyer. If you were bought it in here, you may be washed out if you're holding it. Probably not the best trading, to be honest. But come back down, all the way back down to test 23. So that's good. So you got that double bottom, which a lot of people look at. Buyers are defending that level at 23. We got the market to start lifting. So just remember, after you get that double bottom and what we just discussed about the weekly charts, excuse me, that's a good supportive type of argument for the longer term's looking good. The longer term's starting to look strong. You've got confirmation that longer term buyers are going to defend it around that 23 mark. and that's why you started getting this push up and a higher low building here, this push up. Whether we're going to build that higher low somewhere in here, yet to be seen, but it's looking quite good. So this I would expect to test, you know, at the very minimum, I'd expect to take us up towards that major lower high around 28.25 or even further. And I think a significant resistance might be up around that 29.50. And whether we get through like we just did previously, we took out that high only on a minor, minor amount, which would mean we probably touch 30, maybe touch up through 30. Either way, there's probably from here down at 26, there's probably good risk to reward on that one as well. Does that make sense? So it's actually, I think it's heading in the right direction. Longer term, definitely, it's heading higher. On the daily, you can see that MA is crossed back up again. So we've done a major washout here, retested a level and started lifting. So it's got some further confirmation here. Everything's starting to play out longer term, and we're just looking for that entry now. So it's actually pretty good. Nice one, Greg. SGQ. Let's look in St. George Mining. Good announcement that's ticked it off today. Are you on this one there, Greg? That's going to be a long... I have to wait a little while to get an answer, but yeah. Are you on this one here? What was it doing on this one? Look, the weekly's not too impressive, admittedly. Is that all the action? Okay, so that's probably a high you've seen on it. That was way back in 2012. Lower high here. So it's still the lower highs are holding, even though you've had a good pop up today. The weeklies are still showing. This one, look, it's fine if you're trading on a daily basis, but just be wary. What I'm sort of seeing on this one is more that it's stuck in that, and we could be the top end of a range just at the moment. I want to get rid of that. I hate that. Okay. What am I doing? All right, we'll get that again. So this is what do we got here? SGQ, St. George Mining Limited. What else I've seen? It's potentially just, and it's just confirmed today, really. A higher low in here, even with a bit of a washout. So we pressed all the way down to say just below 6 cents, worked our way up. They're lower highs, and we're still at that stage where we could be a lower high just in here, so it doesn't mean too much. We've pushed down, so at that stage we're making a low here, popped up, lower high, lower low. We've popped up, we've pushed down, but we've made a higher low. So that's an important sort of a thing just to... Okay. Are we still in there, guys? Bugger. If you're still hearing me, bugger. Just refresh the screen if you can hear me. Okay, I think we're back on. Houston, we have a problem. I am spinning. Because that's all the information, John. You're still trying to digest the stuff about bonds. I made it up, by the way. Right. Okay, looks like we're up and going. Good. So what was I saying about this one? I've already forgotten. So we still got lower highs. I mean, this is still a potential to be a lower high, but the thing is we're coming off a zone where buyers are happy to step in a bit earlier, around that 8 mark. Does that make sense there? So it's a little bit different to here because we hadn't, at this stage when we moved up and made this lower high up towards 26, just in here, we hadn't made a high low, which we had. So we've corrected. You can see this corrective action back down. So that's washing out a low. A lot of traders, and up until today, we hadn't confirmed anything, but that's now a high low at 8 cents, and we've popped up. Admittedly, I wouldn't be buying it just up here because it is. If we just go, we are on a daily. We'll go back into the daily. It is, it is extended. We are looking at a bit extended just up here. And I would be waiting now. What I would ideally like to be seeing is more of that. I'll just do it. Oh, I always hate that one. Discard. Oh, we get this in here. All right, what I would be looking for personally. So that's sort of your high low zone around that 8 mark. Obviously, it's cranked up quite hard. I would like to see, a lot of people washed out, and then I think it's going to do a bit of work for me before I'd be willing to buy into this one. Because if you buy here, for instance, I would expect my risk to be way down, below 10. That's a 50% drawdown. You don't want that. So that's not an ideal way to put your risk, and you wouldn't buy it here, just wing it, because it's a bit silly. You don't know what's going to happen. The weekly could still go down and make, take out 8 cents and all the way down. Again, it could do nothing for the next couple of years, and then you're sitting in a big loss for no real reason. So I want to see this wash out of these buyers that bought it on the open on the back of some good news. Was it the open? Yeah, it opened at 23, I think. So they bought it. You want them washed out, these late people, even the people that bought it in here, and then you want it to prove itself again with some high lows. And if we get that, that's worth a buy, because you know exactly where your risk is going to be, and you're buying into a rising market after that washout of traders, the late buyers or the people that bought it on that gap up. You want a decent correction. If you can get down to somewhere around 17, 16 even, before we see this, great. That'd be nice. It could just be a quite quick, sharp action, but I do want to see a few people washed out of that market before I'm happy to jump in. Does that make sense on that one? All right. On and off. And yeah, it's a stream, guys. I'm really sorry about this. We're gonna fix it. We'll get this sorted out. Ooh, yeah. I can see. I use OBS to upload the stream, and normally I used to have it around at the old internet. It was 1200 kilobytes per second upload. Now it's only 500, 600, 700. So it's about half. It means it's going to drop out occasionally. Below 1,000 is not the best. All right, let's. Who's next? Davin, yours, LVH. Let's have a look at that. LVH. That's live hire. This one we've got to buy through 105. I think it is still, isn't it? If I'm not mistaken. 90 is to stop. All right. So on this one here, just there, we've got a buy through 105. I like that. It's a bit choppy at the moment, and this could potentially roll over, take out 95 and have a deeper correction. But like I said, if you get a setup, and this is it's always about risk reward. We've got this sort of move up. There is potential for this to go 1 up and 2, but we've still got the setup. We know where our risk is. We're gunning for those highs. We're looking for this to really kick on. Now, if it doesn't, there's always that chance that we get stopped into the trade with a little wash out of these highs, and then we get that big rollover back down to 80, 85, and it's still that longer term trend still up. We could get washed out, and then but then we have to just watch it and re-enter again. That's fine with me, because it's all about managing our risk. But at the same token, on the flip side, this thing could go on strong, could take out 105, and if we're looking for a deeper correction because we've been overly patient, it is still a good trade. It's still looking really, really nice. We get that break up through 105, that could just go, like I said, that's the push up. That's our push back to here. And what we're seeing, we could just see a bit of this action where it starts to really contract it, and then boom, we get that push through 105. We hold some minor high lows. It could take a lot of time, but that's what that's going to do. Wash out a few buys, a few of those late buys. We're going to get the moving averages catch up, so the market's actually catching up. and buyers are still on the sidelines, ready to go again. We know there's enough fuel to push that higher, and then if we get that break up through 105, great. And this could really, and that could just blast straight through, you know, the 115 mark into new highs, and away we go. It's got a good story. It's been followed quite well, and that's in our NWR. It's on their list, and they do a lot of, I guess, news releases for it, and they follow it quite hard. So it's a nice one, I think. And it's shown, you know, the longer term, it's really shown some good. Let's see if we get what we get on the weekly. You can see it's just holding high lows, high highs, and bang, up we go. So it's still looking good. I like it. Yeah, no, nice to see you, mate. What have I got? What have I got? Was that it? No, there was another one, wasn't there? Back to normal. GWA. Have a look at that. Hub. Now, we've been following those for a while. Hub, stupidly enough, and I will admit it, stupidly enough, I've never actually did an alert. I never traded Hub, and we were mentioning it way back when. You know, I think the last time we looked at it was way back here below 650. It was somewhere around $5 as well. I think it was here. It might have been, I probably can't see. It was $5. So I mentioned it before we pushed up at 5, and you can see why. And around $5, what, actually I just dragged it in, I'll get rid of that. And the reason why I liked it at 5, you can see, I think this is nice because one thing, Hub, we've been following it for a while. It's got a good story. It's in the right area. They keep putting on funds under management, and it wasn't massively known, but I think as they grow their funds under management, and it's not under management as in they're trading it. It's funds on their platform, their reporting package. So funds under administration is what I think it's called. As they grow, they're going from strength to strength. It's a good story, good platform, going nice. So that's why we like that one. And you can see on the weekly, yeah, you got that push up, that contraction lower, but it was really more sideways than anything, but that's washing out a few people. The time it spent going sideways was a good part of half a year, and then we started getting that push back up, that pullback here. And again, there was potential when we look at it on the daily, that in here, when we started looking at it just below $5, that if that break up out of here, that's a longer term high low, which would suggest at least another move up, say from $3.50 to $6. What's that? $1.50. Another $1.50. Say you give up 50 cents, you got a dollar move from 5 to 6. So the risk reward was really, really, really nice at that stage, let alone the fact that it's just kept on going. So the daily, when we look at the daily at this stage, you can just, and the reason why I did like it, just looking at the daily, and I didn't alert it, didn't trade it, just being purely dumb. I like that, really do. I liked seeing that, you know, it started to going sideways, just thinking, okay, that's your low here. We had that little push down, and we started holding only a very, I'll have to go back, a very minor higher low. But the fact that we went sideways for a while was quite about a month and a half. And then I thought if we break up, and we actually broke up here, and then that little pullback really didn't do anything. Can everyone see what I'm talking about? Is that making sense? Because for me, the weekly was on a prime position for a weekly high low, and the daily is actually starting to show some good signs. And as soon as we got this lift, you could have broken out and just bought it just below $5 in that little breakout. You got next to no risk, 20-cent risk, and the payout potentially is another $1. You know, that's awesome. That's a 5 to 1 on that trade. Just that trade alone. And then if you can take your partial, you know, you took a partial up at $6, even higher, you booked your $1. Then we've got this washout longer term, and then it started lifting again. Another little entry here. You know exactly where your risk is. It's gone on with it. So that's beautiful. At the moment, the only reason, and this has more probably been putting my conservative hat on. We've had a good little weekly move up, correction, weekly move up, correction. We've had a good strong move up. So that's a bit different to what we've seen in the past. Making new highs, good strong move up. So I'm looking at it right now, thinking, are we getting a bit extended up here? Look, it could be a setup. You've got to, Yeah, like Davin said, the distance from the weekly MA is getting a bit hard up here. You're getting a bit extended away from it. Not on the dailies as such, but you could have a daily setup here. Could be completely wrong. Buy it through 925. No exec, so you know where your risk is going to be. You're going to risk a bit. Nothing wrong with the setup on a daily. Could still break up. You're holding your risk below, like I said, below 850, and that could go on. That could trade up through 10. Away you go. It doesn't really matter. But if you jump in here and it's starting to get a bit extended, you're running out of people to help you buy it, help lift the price. You're running out of buyers on the sidelines. It's been used up. If that's the case, we're going to have to go through that corrective action to put them back on the sidelines and then build. Does that make sense? Yeah, I know. Does that make sense to you there? Look, nothing wrong with it. Looks good. I like it. I think it's a good, and they could just come out and have another announcement, which they did today. Announce a platform. That was actually nothing much. Platform and enhancements. To me, that's not too much. You want to look at those news flow about. Was it funds under administration increasing? All right, we better get on with it. I'm going to have to finish up soon, but Macquarie, if you have time, no worries. A GWA, that's the one. We'll do that for you, and then I'll finish it up with Macquarie, and then we'll have to call it a day. That's looking good. All right, I know I've spoken to you, and I see what you're looking at, and I think you got your head on. I would say head on straight. Looks good. What you're seeing is quite nice. And just look at the weekly. Oh, I don't need that. What I like on this one. This is GWA. GWA Group. We've traded that a long time ago. Can't remember where, but either way, you can see that the market's heading south. You know, pushing out a lot of buys, building. Then we had that pop up. Should have continued, and that's probably one of the first times we really got a high low in here, and that led to a little breakup. So on a weekly basis, at this stage, you're looking for the entry on the daily. You're trying to drill down because you know that there's probably going to be a nice weekly move up, and you just want to obviously take advantage of it. So the weekly still, even though that this has sort of failed, we've had that deep correction back to that. You still got that weekly anchor at 250, which is into play. This is. Have I got the right one? GWA is a lot like what we just spoke about before. What was that? LVH? Oh, sorry, Nendo, I've got that. ADC. I hope that's making sense. Anyway, so the weekly, we still got, this is what I like to look at. We've had that extension up, we've had another move up. So this is your key level on the weekly anyway. That hasn't been broken, so you're not looking to just get out randomly because we've had this big correction. Maybe we're looking for a nice little entry again on the daily because we are rejecting 250. We're starting to see it lift off again off 250. So this could be another push up through the highs at 330. It could fall short. Either way, you're taking the opportunity to be part of a market that could really kick on strong. In looking at the daily, there's a couple of things I don't like. I don't mind the weekly. I don't like this correction, but it didn't break through 250. So, okay, it's not too bad, but it's the daily which could be showing a bit of weakness. And the only reason I say that is because we've got that 250 mark. That's a strong move down. This is what I don't like, that move down. Okay, we've popped up. We've touched down on that low. So second time, even a washout, we've lifted. So this could be a deeper correction on the short side in reverse. And you can see that it's popped up quite hard. So that buying pressure, what it could be doing is just dragging a few buying, and this could just go bang straight through 250. Does that make sense? What I'd ideally like to see from here is more of, let me just go back. I just want to take off that support line. More of, so that's a good move down. This down here is here. We've popped up. We've even touched down that support. We've gone deeper. What I'd like to see is maybe something like this. I like that two-legged move down, and then it's going to be a higher low, and then potentially look for an entry through there. Off a higher low, you know that's good. You know that pressure down is quite strong. If we can get it somewhere around, stochastics are down lower, showing us a good sign that that's going to be a high low. We know where risk is, so we know that that's potentially going to be a high low, and we could be working our way up to 330, and that way your risk reward is well and truly on your side. Does that make sense? All right, let's finally we had one more. MQG. Let's quickly look at MQG before I head off and get myself a coffee. Look, that's heading up. You know, maybe on the weekly we're starting to look a bit, you know, we're at that stage where we're looking a bit extended up here. Even this is a leg up. Let me just quickly draw it. So the reason why I probably wouldn't take this is maybe due to the weekly. I don't think there's enough left in it on the weekly basis. You know, we've had this move up, not really a corrective action. That's probably the end of this move up here. Just take that back a step, maybe up to here. Then we've had this, you know, we tried, we found resistance, had to have a deep correction. So that's, you just probably use support. Then we started building, you know, then we've holding higher lows, you know, got a bit ahead of itself up here, corrected. But that's all part of a one leg up. So to me, how far into it are we? Are we, you know, we're only 50% into that move up, or are we getting a lower probability trade? Are we starting to get it to a stage where there's not much left in this leg up and we have to have a deeper correction like this? Does that make sense? So we have to have a little pop up, we get rejection there, and have a deeper correction back down to this 72, 73, 74 mark. Is that making sense? So in that respect, I wouldn't want to touch it, and I don't like where the stochastics are up here. We're starting to, just this part here, just this move up off 82.50 up to about $100 is starting to look extended. And that $100 mark, that even 100 is going to be psychological level to potentially where you're going to get a bit of selling. For people who have been holding it for a while, you know, around 60, 70, $80, probably going to take something off. So maybe that starts rejecting, and then you just have to see where it goes to from here. Whether we start popping up there and we start just doing this, and then we get that higher low start building again, and the stochastics are in a better position, and then we're actually holding a higher low in here, somewhere around 90, and then I'll be happy to start looking into buy entry. But at the moment, off the weekly, I don't really like it too much. And if we just see what that daily's saying, look, the daily's not too bad. It's taken a bit of effort, but we could just retest 100 and then boom, have to take a deeper correction. So yeah, for me, I'm happy just to leave that one, leave that alone. Mainly for the weekly. I think this is I've done 24 million. And when they start exiting, I think there's going to be quite a bit of selling because it's a big stock. It's traded by funds and everything as well. It's not really one that you're going to get a lot of, I wouldn't think anyway, a lot of return on it. I'm just biased. I don't know. Macquarie. Good old Macquarie. Anyway, what I might have to do, guys, is call it a day there, call it quits. Thanks for joining me. And thanks for hanging in there. Sorry we did drop out. We'll try to see if we can just get something sorted out for, I can even just put it through the mobile on, just not even bother, put it through the mobile on Thursday, get organised so there's just not going to drop out, and then we'll just go from there. So yeah, thanks for joining me, guys. Hope that was useful. If you do have any questions, feel free to send us through an email to support@tradesetup.com.au or support@tradedirect.com.au, tradedirect365.com.au. Send us through a chart if you like. If there's anything you want to look at, or feel free to just give us a call. Any questions? And also, if you do like what you see, it'd be great if you can jump on our YouTube site and just give us a like, give us a thumbs up. That'd be great. Spread the word for us. Tell your friends, family, cats, dogs, whoever you want. But yeah, thanks for joining us, and I'll be back in on Thursday. Thanks, guys. Bye.